This is Create the Next from Pro CFO Partners, where every week we explore strategies and ideas for financial management and growth to help today's businesses put their financial picture in context.
Welcome back to Create the Next. I'm Chris Bentliff, and I have with me today powerful people. Nelson Tepfer is the CEO, co-founder at Pro CFO Partners, and Ami Kassar is the CEO and founder at MultiFunding.com. And Ami, really looking forward to our conversation today because one of the things we talk about a lot at Pro CFO Partners is, in fact, we've got a title of an episode that always rings to my mind is Where to Go When the Bank Says No. And one of the things I want to talk about, multifunding helps businesses grow, finding creative or sometimes alternative or just maybe a more thoughtful way of getting funding. That's my way of saying it. I'm certainly more interested in your way of saying it. But one of the things I guess I want to ask you just off the start, I'm curious why you started the company, but what is going on in organizations that leads them to needing to do something maybe outside of the normal bounds of can we get a loan at the bank? There's a lot there and tons of different industries and different verticals, but is there a general, do you find consistently it's this thing? Maybe it's a creative organization or an innovative organization, or the bank doesn't know how to think about this organization in such a way, or is it more nuts and bolts? You're just not prepared. What do you see kind of consistently?
I think there's an external and an internal answer to that. So internally, which is the important work that you do, oftentimes finances and financial statements and bookkeeping is a mess. And so that comes to roost when it comes time to get financing and catches up with you. Okay. And so in that case, it doesn't matter whether you're going to your bank or wherever you're going to have challenges if your books, your bookkeeping, and your financials aren't in order. So we see that all the time. I know you see it all the time. And
Yep.
I couldn't press it more. Invest the time in your bookkeeping and your accounting. So when the day comes that you might need financing, you're ready. So that's sort of the internal answer to that. The external answer to that is that there seems to be a sort of a general myth out there that the best answer or the only answer for your financing solutions is your local bank or the bank that you've had a relationship with for a long time. And that may or may not be the case anymore. We're close to facilitated $1 billion of financing for our clients. And I think the bank, the lender, and the borrower have met each other in person maybe less than 5% of the time.
Wow.
And these aren't like crazy off the rocker alternative expensive financiers. These are SBA loans or just conventional loans. And your bank in your neighborhood or your bank that you've had a good relationship with may or may not be the best solution for you anymore. And people have to stretch out and just check and get a second opinion about what might be possible.
Nelson, I want to get your thoughts on a couple of those things. The first is that we talk a lot about the importance of reporting and things like this, but we also talk about the importance of strategic mindset and skill set with the CFO. So how do you respond to kind of what Amir's saying of like, and you interjected, yep, like, is it consistent, like epidemic, everybody get your house in order? And I love that Amir said, so when the time comes, sometimes we don't think of it like that. We think,
Yep.
We're not, we should probably talk to the bank, you guys. Like we maybe don't have time to like spend 6 months on this. We should have our ducks in a row right now. What do you see consistently from your end?
So to what Ami said, absolutely true. With companies, I'll say this semi-jokingly, but Ami, you will certainly concur with this one. The worst time to ask any funding source for money is when you actually need it. Meaning, yeah. So it is about being prepared and having the right facilities in place so that you can capitalize on the opportunities and you can continue run your company without any interruption. But fun story, and Ami, I'm sure you have quite a few of these on your own, but we worked with a company where they ran into this problem because of exactly this specific scenario where they were legally, we'll leave the conversation for the illegal side of things to a separate conversation, Chris. But legally, they were reporting, on the tax side of things.
For illegal conversation on the roadmap, but okay.
No, they're reporting, as many small companies do, minimizing what they're showing on profits so they can, obviously have better tax provisions on those side of things. But then when they would try to actually go get funding, obviously no institution is going to look at them and say, sure, you're only making this amount of money. We're going to give you all of these money that you actually, can possibly do as well. You can possibly use. And as a result, they went into some, you talk about those off the wall kind of rate type of things. That's the environment they ended up in because they didn't know nowhere else to turn at that side of things. Now, their financials, highlights this example. Their financials were not prepared correctly in a way that allowed them to get funding from any institution, any normal institution that's going to go through a standard underwriting process. So it is about making sure the function is built correctly so you can go through this process. And then you can determine, through someone like Ami's assistance, is like, okay, what is the best solution for you? What is the right source that you should be looking at capital? To Ami's point, banks can be good, but there are a whole lot of other solutions out there as to what is the ideal structure and the best to actually help this business achieve its goals.
Ami, banks have they have a prerogative, they have a point of view, and often it's a more conservative point of view. They've got to make sure that everything looks good from their end, from a lot of different levels. So, to some extent, I don't want to necessarily feel like banks should maybe be more creative thinking, but you said something, especially today, you said, and I think that's interesting because we're not in a climate that often seems comfortable or consistent with tradition, I guess, anymore. There's so many different ways to build a thing, create a thing, market a thing, introduce a thing, and certainly to finance a thing. Do you feel like that disconnect is getting wider? So the sort of traditional or institutional way of lending is becoming, I don't want to say obsolete, but less and less foundational to what you're able to do. And are organizations aware of the alternate or more sort of creative funding options out there? Or is it, well, the bank said no, so that plan is off the table? Where is that kind of chasm? Is it narrowing or is it getting wider?
Well, let me maybe clarify where, at least today, 95% of our work is. 95% of our work is with the SBA lenders. Okay. And SBA has a huge branding problem because people think that their particular experience at a local bank is what the SBA is. Really, your SBA experience is driven, A, by the quality of your financials and also by the bank or lender that you choose to do the transaction with and how they apply the SBA program and how creative they are in their use. So somebody could walk into their local bank and who they trust, and either that local banker doesn't understand the SBA, or maybe they're not bonus for it, or maybe the SBA is just happens 7 buildings down or 3 states across, and they just don't know it and they don't use it, and they just tell them something that's misinformation and that's not true, or they don't even recommend the SBA for that. Okay. Well, there are banks in the country that we use that specialize in doing SBA lending nationally, and they understand the intricacies of the program extremely well. You're still going to a bank, you're still getting a great rate loan, you're still getting all the protections of an FDIC insured bank, you're still getting all the protections of the SBA. It's just that your local bank is not good at the program, or they didn't use the program, or they didn't do it. I'm not saying that the SBA is right in every scenario. That's not what I'm saying, but that's just one example of this myth. It's like almost when we thought that out, we realized our parents don't know everything. Well, your local banker might not know everything also.
Nobody tell my 16-year-old daughter that.
Good luck with that.
Right. So my understanding from what you're sharing is you have MultiFunding has some insight there, so that in your particular situation, whomever you are, in our network, we know that this could be a good bank to talk to, or we've had success with this bank, which tell me if I'm right or wrong there, but personality then seems to really matter, your contact over there, or just the dynamic of that institution or whatever. Is that accurate? Is there such variability there that
it's personality? I mean, partly personality, but and banks change, right? It's their credit criteria, it's their philosophy. We know there might be one bank that hates funeral homes. There might be another bank 3 states across that loves funeral homes. There might be a bank across in Florida that loves loans under 500K without a mortgage on your house. The local bank still insists on a mortgage on your house or lien on your house. And sometimes credit policies change. We had a bank, we've placed $67 million of debt with them over the last several years, and their default rate on that is $300,000, which is nothing. A few weeks ago, they completely changed their credit box. Things change, right? So
they do. At all size institutions, they change. And we've seen this just over the past several years. I mean, think of how much of a change banking has gone through in the past 4 years, just since COVID, especially now last year with the recent banking issues. We'll refer to them nicely. Definitely banks have changed quite a bit with their credit policies. We've seen that just at standard banking, let alone, Ami, to your point, in specialization in the SBA space.
Right. Even in the alternative lending space, a large national lender based in the UK called Funding Circle just announced this week that they're selling their US operations.
Wow.
Okay. Amazon resellers just announced this week that they're getting out of the lending business. They've been doing a lot of lending for Amazon resellers. So the market changes, banks change, and companies change as well. So our job is to stay on top of it, which is not easy, but that's what we strive to do every day, so that when clients call, we can hopefully and give them the best options that we are aware of that are out there for them at the time. And if it's a local bank, that's great, but that's not always the case.
Which, and we talk about this a lot too, Nelson, speaks to the value of a partner who can sort of run interference like that for you, and who does that. That's the thing they do. Their sweet spot is to look for and navigate through that. When you're, Nelson, working with an organization, funding comes up, is the default starter like, well, what does your local bank say? Or where have you gotten a loan before? Or like, how do you start that conversation? Or do you start more from, let's get to know you better, and then, Ami is a resource of mine, I'd like to run this by him. Like, is there a pattern that we can think of? Because I wonder how many organizations are doing this wrong because their CFO isn't a creative thinker or isn't a wider thinker, or is thinking, well, if the bank that we've had a relationship with for 20 years says no, I think we're up a creek, everybody. Like, how does that go from your perspective?
So when we see this, first of all, yes, unfortunately, many companies do not approach this the right way, or the right way that best supports them and their organization. We'll call it, broadly speaking. When we get involved, I mean, yes, funding is definitely something we look into, but it's also funding for what? Is this investing in the company? Is this general operations? Is this working capital, or is this some kind of CapEx that they actually have to realize they need to invest in the organization? Because then it becomes, what are the best sources for how they actually do this? I mean, while a bank may usually be the default because every organization may have some kind of institution, we as CFOs will know to a certain degree, with not anywhere close to Ami and his team's specialization, is this something which even is bankable or not, or the standard institution, without going to any specialization or understanding beyond this. We also, frankly, know banks in our region. Ami's experience and expertise is across the country and even internationally across some of these institutions. So we'll know quickly, like, okay, if we're going to need to get something funded, if we're going to need to put a funding solution in place, what are the things that we are aware of immediately? And if those are good solutions, great. If they're not good solutions, or if we need something else, then we go to a resource and specialist like Ami, who we worked with in the past, to say, okay, this is what we see over here. These are the challenges we're identifying. Makes it much easier for him and his team to actually dive in, because we can present some of the challenges in advance and say, okay, is this something that you think is still workable? Or where other resources do you have on your plate that may be able to help this organization?
I love this idea of collaboration on that, Ami. So is that like when a proverbial Nelson calls and says, hey, I've got this situation and everything looks good, we've got all the numbers we need to look, I'd like to run this by you. How does that engagement work a little bit from your end? Is it I guess I'm wondering, from the business owner, the business leader's perspective, is that a 3-week thing or a 3-month thing, or who knows? Or is that I'm pretty confident that I can have a good conversation with somebody here about this pretty soon? Or is it, boy, I really need to get to know more about this kind of wide net? I guess I'm kind of wondering, like, mechanically, What is that process a little bit like from your end as it's related to or relevant to the business owner, the founder, or whomever that's kind of stressing about this, keeping them up at night?
We'll be on the phone with that client and the partner like Nelson super quickly, hopefully within 24 hours, to evaluate the situation. And sometimes, a little bit like we think of ourselves almost like loan doctors. Sometimes the doctor's got a quick diagnosis. Okay, you can pinpoint something pretty quickly and suggest a path of action with a good amount of accuracy really quickly. Other times it's not that clear and we need more information and need to dig in. Ultimately, what we do is we're storytellers to lenders. And so we need time, which can be quick or take a little time to get our story together to pitch to the right lender for the right situation. That's when the lenders take over. And then depending on the type of loan, the situation, it can be a few weeks, it can be several months. We've been doing a lot of business acquisition financing over the last year and a half. And there are a lot of parties that can screw that up besides us. There's 2 lawyers, 2 egos, buyers, sellers, et cetera, et cetera. And then all the lending issues. And I always joke, it's never over till the fat lady sings, right? So it's never over until it's done.
Yes.
So obviously we try to find lending partners who are open, able, and willing to move as quickly as possible. But sometimes they also have regulatory constraints. They're lending the money. It's the golden rule: is money makes the rules, and you got to comply with all their needs. And we can push hard, but we can't fight gravity.
I love this analogy of storytelling as a marketer. That's absolutely hits me right in the chest. And I'm thinking, I always say we have to know what is our story and who cares. And I love the idea that you just brought in all these different dynamics that can be part of the who cares, because how you tell that story, it matters which audience you're telling it to. And Nelson, how does that work into the fabric of what you're doing? Because it's really easy to say, well, let me look at the numbers, everybody. Let me look at the reports, everybody. And that might be indicative of the story. But when you're working in an organization, do you think like that? Do you think, I've got some sources, everybody. We don't need to get the fine details, but we do need to know who we are, what we're about, who cares, how this works in the grand scheme. Like, does that story element, even if not explicitly said, sort of come into play when you're in the nitty-gritty of it like that?
It does to a certain degree as we see it. I mean, almost every funding institution, and this is obviously Ami's specialty even more than ours, but almost every funding institution has some sort of write-up that goes in with every kind of submission or for any kind of loan. How much the write-up weighs compared to what the financials show, some institutions may look at a little bit differently depending on their credit appetite at that moment. And this is to Ami's point, this changes. Some institutions may look at that more than others at various points in time. There is almost always some degree of the story that's going on over here. Again, how much of it is cut and dry, how much of it requires a more creative writer, we'll call it, will vary by the institution, will vary by the organization. But to a certain degree, there is always some story that needs to be submitted with almost any kind of funding request.
You also have to have a trusting relationship with the lenders. Yes. If there's one of the things we're always doing is we're looking for the elephant in the room, and there almost always is an elephant in the room, and we're not going to hide that elephant. So when I talk about storytelling, it's painting the picture, but painting it in the best possible way, but also painting it accurately. We're not in the business. We need a good relationship with our lender today and tomorrow for this deal and the next deal. And so if we smell a rat in the room, we're going to try and uncover it, and we're not going to hide that from our lender.
As ever, it comes back to the relationships and the authenticity of those relationships, right? Like everything always, the funnel always whittles right down to that, which is the double edge of it all, and it speaks again to the value of having people on your side and on your team who have their own relationships and who can kind of bring in different dynamics and a wider net like that to cast. This has been a really great conversation. I'm up for like part 2 and 3 and 5 and 7, whenever you guys are ready. Ami Kassar is at multifunding.com. valued partner, Pro CFO Partners. And I can't thank you enough, Amit, for joining us today. Nelson, it's always great to spend time with you. And gentlemen, thank you so much for your expertise and your generosity in sharing that with us today.
Thank you so much. Appreciate it.
Thanks, Chris.
Thanks for watching, and a special thanks to our subscribers. Consider becoming one today. Visit ProCFOPartners.com for more strategies and ideas for financial management and growth to help you put your business's financial picture in context.